With the news flow from the eurozone and elsewhere, there's no end in sight to currency volatility. So how is that impacting on the Forex market?
The eurozone is under a tremendous amount of fiscal pressures due to the deteriorating debt crisis, which has haunted the region for many years. At the forefront of the financial news is Greece and Italy. Greece is at risk of defaulting on its current obligations, and the new government needs to come to an agreement over the austerity measures in order to receive the second round of bailout funds. Italy is also suffering due to the uncertainty regarding Italy's government. It has 1.9 trillion euro of debt, and as a result, its 10-year bond yields have shot up to new euro-era highs. They say it's more of a game of politics as opposed to economics. Financial news has a much greater impact on the market, as was seen in previous years, and traders need to react more rapidly to the changes.
What's the feedback from your clients? Where have they been looking for opportunities amid the turbulence?
One of the main advantages of the Forex market is the ability to short sell and gain profits on the decline. When it appears that risk aversion has stepped into place, traders flock towards safe havens such as the US dollar, and these days gold is also seen as a safe investment. Traders these days are looking more towards monetary policy changes and economic data changes in order to gauge where the market is headed. They have a much more short-term mindset when it comes to taking trades. Traders have become more aggressive in these volatile markets by taking a few pips in big trades, and it seems that this is a less risky method than taking a long-term stance regarding the future of a currency or asset.
Looking at the US, usually the engine of global growth, what's the outlook for the economy there?
The situation in the US is more optimal than the current state of the eurozone. The main issues at hand are the sluggish housing market, the very slow job market, and the deteriorating debt crisis. Standard & Poor's downgrade of the US in August from AAA to AA+ did not help matters and lowered sentiment substantially. In parallel, US policymakers put many policies in place in order to ignite activity and growth in the sector, thereby aiding the recovery process. It seems it's more of a waiting game as to whether these policies will work, and overall outlook is still dim.
And given that background, many investors have been turning to the glamour of gold.
Gold has been a very interesting asset over the past year, and a main focal point as far as commodities go. Starting off at around $1,300 an ounce at the beginning of the year, it then rose to record highs in September of around $1,920 an ounce due to major market uncertainty. Since then, it plummeted to around $1,500 an ounce due to being severely overbought. Contrary to regular market activity, when traders used to run away from the gold in times of uncertainty and when risk aversion stepped in, it has become a very safe investment, and it is very glamorous indeed.
So finally, in the context of all this global uncertainty, how do you ensure the continuing popularity of online Forex trading?
Forex trading is a very attractive medium due to its many advantages. The fact that it's so easy and accessible, either via web, mobile trading, or computer platform, is a big plus. In addition to currencies, ForexP offers CFDs on indices, commodities, shares, and bonds. And we are constantly updating our platform in order to keep up with market demand.
Sara Friedman, thank you very much.